Rising concerns over a possible US recession, a possible mid-meet Fed rate cut and the Japan carry trade all combine to spook the equity, currency, bond and commodity markets.
Despite a ferocious 20 basis points fall in the US yields, India's 10-year bond yields are down only 5 basis points to 3.84, even as the CNBC-TV18 Citizen MPC sees no change in rates or the stance from the Reserve Bank of India.
Britannia clocks healthy volume growth and sees a good pickup in rural consumption, modern trade and e-commerce, with rising commodity prices hurt margins. FMCG stocks gain on expectations of higher consumption.
SBI Chairman Dinesh Khara remains upbeat on growth and credit quality even as deposit growth slows down, but analysts fret over crimping margins and rising stress going forward.
Warren Buffett's Berkshire Hathaway likely sold almost half its stake in Apple for over $84 billion, boosting its cash pile to $277 billion. This is being read as a strong signal of frothy valuations. Hello and welcome to Business Lunch. I'm Sonia Shenoy and with me is Hormuz Fatakia. Not a good day for the markets at all. In fact, global markets, after a very long time, are seeing the first real signs of a correction. Now, whether this will extend itself or not, only time will tell. But for now, there is no respite in the market. We are at the lowest point of trade. But the important point to remember here is this, that for the last 1 to 1.5 years, we haven't got any major correction or pullback in the market. It was just a matter of time that this had to come. Of course, we have the genesis of this fall is the global market sell-off that we've seen. Signs of rising recession in the US, the weak jobs data, the Japanese market is under pressure. But remember that in the last 10-15 years, if you've mapped it, the Nifty has always given a compounded growth of about 12-13%. And hence, this is perhaps a pullback in an otherwise longer bull market. But time will tell. For now, some views coming in. Treasuries are surging as traders are betting on an emergency Fed rate cut. So there's lots. It's an evolving story. But for now, we're dealing with the fall in this market.
The flash is also showing in the bit of a recovery in the futures of the Nasdaq as well, because at one point the futures were down over 1,000 points. Now they recovered to about 800 points as we speak. So there is some bit of hope that the Fed will have an emergency meet. All of it is just speculation. There's nothing official just yet. But the index now down below, well below the 24,000 mark, 3% down on the Nifty, trading well below the lows of the budget day. But the sectoral indices are seeing some really deep gashes this afternoon. The metals index is down 5.5%. The realty index is also trading with losses of over 5%, as is the PSU Bank index. And of course, the Nifty small cap index, which is also trading with losses of over 5%. And all of these high flying stocks, be it the PSUs, the railways, the defense names, all of them are seeing some bit of selling pressure in today's trading session. And it is showing up on the screen as well. 23,950 on the Nifty so far. The Nifty Bank is now below the 50,000 mark. So that is also one of the underperformers. All the global facing names are seeing a bit of selling pressure. But the top Nifty loser today is Tata Motors, 7% lower now. And ONGC is the other one reporting results today. Another 6.5% down on that stock as well. We'll continue our focus with the markets now. And the markets as we speak have seen a sharp sell-off following weak global cues. And Mangalam is now joining in to take us through these market moves. Mangalam.
It's a trifecta of problems, Hormaz. It's US recession fears, mixed earnings in both US and India. We forget that, Intel was down 26% on account of earnings miss. And also India, so far, the earnings that have come in has resulted in a near 1% EPS cut for this year itself in terms of expectations. And thirdly, our hefty valuation. So there was a clamor for correction in the market. This was just one of those triggers. Global sell-off. Nasdaq is in correction zone. This morning we saw a cut in Nikkei, Kospi, and also the EU futures are suggesting a weak opening. Thereafter, the only thing that rises when everything else falls are, the correlation between asset classes. And we have alternate assets, including crypto, which has seen a sharp sell-off. Nifty down nearly 750 points. The Sensex down 2,400 points. The Midcap index index has seen a worse fall. In fact, over the last couple of sessions, even when the Nifty was up to 25,000 levels, the mid-cap index was actually weak, and the broader market, sentiment tells you that over 2,200 stocks declining for just about 150, which are in the green. And as we speak, there are over 450 BSE stocks which are in lower circuit versus 250 in upper circuit, and there is no Group A or Group B stock in upper circuit as well. So that's telling you about the weakness in the market. India VIX has seen the highest intraday spike ever since 2015, August 2015. So that's another thing we have to keep an eye out on. What are the nature of stocks which are falling? They have to be global facing, commodity facing, or perhaps stocks which have seen a big run up. So you have Tata Motors, ONGC, Infosys, Hindalco, all of them lower. Then the ones which have seen a big run off, the likes of NCC, GMR Airports, even LIC Housing Finance on the back of poor numbers, and then some of these defense and rail names are also seeing a big sell-off. What are the stocks which are doing well? We have HUL, Tata Consumer, Marico, Dabur, typically the stocks which are seeing flight to safety with improving outlook in terms of rural demand. FMCG stocks are the only ones bucking the trend and have seen mild green performance, though they too are off the highs. The most important things to track from now would be commentary from the Fed. Typically, central bankers follow three-step processes. One is commentary. If that doesn't work, then it's open market operations, and if that doesn't work, then you have the action, which is the rate action. So we'll have to keep an eye out on commentary first. And secondly, on Thursday itself, we have the RBI policy outcome. Do they make a change to their stance and take note of what's taking place in the global markets is something that we'll watch out for crucially. But right now, under a trifecta of problems, we've seen a sharp sell-off.
Okay, a sharp sell-off following the steep fall in US bond yields on Friday. Indian bond yields too have fallen to fresh 26-month lows of 3.84%. The rupee too has hedged down to fresh all-time lows of 83.84 in the intraday trading today versus the dollar. Lata is here with an editor's take. Lata, over to you.
Well, I'm going to speak about the markets that didn't fall much, or the dog that didn't bark. Most of the EM yields in currencies are actually a picture of stability, and it's a very minor fall. Some of them have even risen. Just for context, the dollar index has fallen from 104.5 on Thursday to about 102.7. So that's almost 2 units that it has fallen, which would work out to about 2%. But because the dollar has fallen, counter currencies actually rise because it's always measured against the dollar. The yen and the ringgit are up 2.2%. The Chinese yuan or the renminbi and the Filipino peso are up 0.2%. Yes, the rupee and the baht have fallen, but just by 0.1%. For the record, it may be all-time low, but it's really a minor fall. And there is, of course, an expectation or a suspicion that the Reserve Bank may have even supplied dollars. That's what dealers tell us. Now, you should not expect that because they are selling somewhere, they buy in India as well, because traders globally have lost money. So there is no question of coming and buying. But extra selling of Indian bonds or emerging market bonds and currencies may not happen unless the US slowdown threatens to become a global growth scare, which at the moment it is being seen as a US-centric and a US tech-centric fall. Now, Indian bonds, just to complete the story, have fallen by about 5 basis points. And if you look at it from July 1st, then the fall is about 16 basis. They were 7%, and now it is 6.84 for the 10-year, whereas the US yields were 4.5%. The 10-year as of July 1st or July 1st week, and now they are at 3.7, an 80 basis point fall. So in India, there is a murmur in the bond markets that if there is an overall growth scare because of the US crunch and jobs data, then the Reserve Bank will have to think. So in our own Citizens MPC, we did notice that all members voted for no rate action by the RBI on Thursday. But when it came to the stance, there was a bit of a dissonance. Although the majority still said no stance change, there were 2 people out of 5 voting for a stance change. And the market has enough number of people voting for a stance change. Maybe you want to get a piece of the action that happened in the Citizens MPC of CNBC-TV18.
I think the MPC will continue to hold the rates.
Okay. Sajid?
Hold.
Hold. Samiran?
It's a hold.
Sonal?
A pause.
Okay. Dr. Sen?
Hold.
Okay, that's a unanimous vote. Now let's come to the stance where I have heard some different arguments. Will the MPC change its withdrawal of accommodation stance in this policy? Shaumyo.
I think the stance will also remain same, withdrawal of accommodation.
Okay. Sajid?
I believe for now they will retain the stance.
Okay.
Withdrawal accommodation.
Okay. Samiran?
Retain the withdrawal of accommodation stance.
Sonal?
They should change,
Should.
but they will likely retain.
Okay.
Yes.
Should. So I'm taking you as neutral. Dr. Sen?
I agree completely. They should change, but they are likely to retain.
Okay, so I will take it as 2 neutral votes, and who knows, that might be the surprise in this policy. Very quickly, a third question. When do you see the first rate cut? Shaumyo?
Maybe possibly the first rate cut could come in December 2024.
Sajid?
The October to December quarter.
Okay, so
Given
it
global developments.
could be as early as October then. Samiran?
We are calling for April 2024.
Oh, okay, unchanged you remain. Sonal?
October.
October, I think 2 people are getting it a little forward. Dr. Sen? Okay.
December or early next year.
Interesting views coming in there from the Citizens MPC. But one of the other factors that has spooked the global markets is that has been the yen carry trade, which has been in focus over the last few sessions, as the yen has appreciated sharply after the Bank of Japan raised interest rates and reduced bond purchases. Now, this has caused investors to unwind their positions. Now, how is all of this affecting the global markets? Prashant is here to explain all of that. Prashant.
Hormuz, whenever markets sell off, and we've not had big market sell-offs for a long time now, but I remember over the last 15 odd years, whenever markets used to sell off, people used to go to the yen, unwind of the yen carry trade immediately. Is that happening? So I always resisted the temptation to do that, to blame it on the unwind of this carry trade. But the fact is that we've actually seen an astounding move on the yen. Let me just begin by telling you what is the yen carry trade. It is essentially borrowing cheaply in yen because interest rates in Japan have been near zero for 25 years, and then investing it higher yielding assets, be it stocks, futures, bonds, currencies, anything around the world. Anything which gives you more than 0.5%. You assume currency risk, of course, and then you invest it and you make returns. This is anecdotal, but a lot of Japanese retail money has come via that route because, I mean, the difference exists into India as well. So that is the yen carry trade. Why are we talking about whether it is unwinding? Is because the yen has gone from 162 early July to 142. I mean, basically, it has rallied, 10% plus 12% in the last 1 month. A currency has rallied that much, and not some piddly sort of frontier market. This is Japan we're talking about, and that's the move we've seen. What has also happened is that government bond yields in Japan have gone up, and yields in other markets have come down. So the spread, the differential between the government bond yields in Japan and other places also came down, and it reduced the attractiveness of trying to buy other assets. Using cheaper yen. What has triggered this, of course, is that the Bank of Japan started hiking interest rates. We saw 2 hikes, and the assumption was that Bank of Japan is the start of a hiking cycle at a time when the rest of the world is actually thinking about when will rate cuts come. So Japan was going one way, the rest of the world was going the other way. And that has triggered this massive move in the currency. So think about it. I mean, if you've borrowed cheaply in yen and if you've invested elsewhere, and the currency moves, I mean, USD JPY has moved 20 yen in the last 1 month. You are essentially looking at massive mark-to-market hits, and that basically forces one to unwind positions willingly or otherwise, and that is essentially what supposedly is happening around the world. There's no way to really confirm this. I mean, I've tried many times in the past also to get a sense of what is the size of this carry trade globally. But you get all kinds of numbers, but presumably it's in the hundreds of billions of dollars because markets themselves have become so big. And of course, they're so interlinked now. So that is essentially the fear what is happening right now. What will stop this? The Bank of Japan itself, I mean, its hiking campaign is, according to me, dead in water. I mean, they cannot hike anymore. Perhaps we should be looking at intervention in financial markets. So will the yen stabilize? I think that will give some comfort going forward. Back to you.
Okay, thanks a lot for that. Well, you can also read this entire explainer on carry trade, etc. on our website. So do go on to CNBC-TV18.com for all the latest news and information, including this story that you just heard from Prashant. But let's take a short break. When we return, we'll get you more news and updates on the other side. Stay tuned.
With us here on Business Lunch, and moving to some news from the aviation space, marking 18 years of flying and spreading its wings across India. Indigo celebrates its anniversary with a flurry of new business updates. Danish is joining in now with more details. Danish, what is the latest announcements made by Indigo?
Well, Indigo has announced its foray into business class services as the airline has introduced Indigo Stretch, which is basically a business class product which will be initially introduced in domestic flights. So from mid-November, there will be at least 12 aircraft which will be featuring 12 of these seats, and this will also offer customers an ample leg room. And as far as the configuration of the seats is concerned, it will be in a 2-2-2 format. And besides this, the cities that Indigo will fly using these business class seats will be initially connecting all metro cities. So from flights between Delhi to Mumbai, Delhi to Chennai, Delhi to Kolkata, Delhi to Bengaluru are the first few routes where Indigo will fly. And the pre-booking of this will begin from 6th of August. And the initial tickets have been priced from rupees 18,018 rupees. Another thing that Indigo today launched was its loyalty program. So Indigo has launched the Blue Chip loyalty program, and in this loyalty program, every passenger can earn for every flight that they're flying in, and it will also depend on the type of route and also the time of the flight when a passenger is flying. Besides this, Indigo has also given us a glimpse of how the future will look like, as the airline is all set to receive A321 XLR from next year onwards. Similarly, the airline will also be inducting a wide-body aircraft 2027. So we have it from Indigo. They are, moving on from a low-cost carrier image to offer different and a unique airline in India.
Okay, thanks a lot for that. So Indigo moving away from its earlier business model and now looking at business class products. Well, that's going to be interesting. And a lot of analysts do believe that that will help them with their rise in profitability as well. Let's take a short break on that note. On the other side of the break, the market continues to sulk. So when we come back, we'll try and get you more news updates. Welcome back. You're watching Business Lunch on CNBC-TV18. Well, it's finally the end for Go First, as we understand from sources that lenders have now voted in favor of liquidating the airline. Ritu Singh has been tracking that story for us from the word go. So she joins in now with more details on that. Ritu, over to you.
It's the end of the road for Go First, with the committee of creditors voting unanimously to liquidate the airline after finding no viable offers. We understand from sources that Go First lenders voted to liquidate the airline after the Singh Pitti consortium withdrew their bid, and Sharjah-based Sky One's offer also fell short of their expectations. Remember, we've been reporting that both the suitors had offered very little cash upfront and had hinged their offers largely on the proceeds from this arbitration case against Pratt & Whitney. Now, banking sources we spoke to said it made no sense to keep pumping in money to keep the airline alive when the aircraft were already deregistered, there were no good offers, and that liquidation was the best move forward. Instead, the lenders are now going to focus their efforts to pursue the case against Pratt & Whitney at the Singapore Court of Arbitration, where they have claimed more than $1 billion in compensation. So if they do win that case, it offers them much better prospects of recovery. Remember, Go First had filed for voluntary bankruptcy in May last year, blaming Pratt & Whitney for supplying faulty engines which contributed to their financial issues. The key lenders to Go First include Central Bank of India and Bank of Baroda, with IDBI Bank also having a small exposure. Now, once all of the legal formalities are completed, the liquidation process will start, bringing Go First's nearly 2-decade-long run to an end.
Ritu, thanks a lot for that. But that is a wrap on this edition of Business Lunch. We leave you with a minor recovery on the Nifty. That's what it is, a minor one. From Sonia, me and the team that put this show together, thank you so much for watching. Midcap Radar up next.